We are going to introduce our two experts. So we have David or Dave Nelson with Neo Home Loans and Luke Hefner with Harvest Bank, and then our CEO at Curbside, Sue. So they're here to talk to us about loans today. If you have any questions, just throw them in the chat or in the Q&A, and we will have time to answer those later on. But for now, Sue, you want to take it away?
Sure. Yeah. Thanks, Deb. And thanks, everyone. I'm so happy everyone could be here. I hope you find this session that we put together educational. Everyone's in a different place in their lives, different stage of their career. Whether you're a medical student, you're a resident, you're a nurse, whatever it might be, everyone's in a different place, but the process remains the same. And the resources remain the same. So again, what Deb mentioned, we've got two experts here. We've been they've been valuable partners with Curbside and helped many of you out there purchase homes using physician loans or not. And so I think we're going to go over some of the topics. And again, as Deb mentioned, if you have questions, maybe we didn't answer, or you want us to elaborate on something, feel free to, throw a question in that chat, and, Deb can kind of interject, or, we can answer those at the end. So just to get started, I know, some of you know what physician loans are, some of you know what mortgages are, but some of you may not. Everyone kind of has a different knowledge base. So I thought that, first we can just kind of go over, what is a physician loan? How does it differ from a conventional loan? And, maybe for that topic, we can have, Luke, can you just sort of explain what a physician loan is and, how they sort of work?
Yes. So a physician loan is a loan that's really in place for people that are high income earners that may not have a lot of cash on hand. They haven't maybe yet started their job. They may be still in residency, or if they are residency, they don't have very big of a salary to be able to support the repayment of a loan. And also for the people that don't really have established credit yet either. And lastly, it's really in place for people that have a lot of student loan debt. So on a normal conventional loan, all those things would hurt you, or it would keep you from qualifying. Physician loans are tailor fit for people that have not a lot of cash on hand for a down payment, maybe not have started a job yet, but maybe have a contract for a job, maybe not have established a good credit score yet because they just haven't had that much time to do so. And they have a lot of student loan debt that may not have to be used against them with a debt to income ratio. So really the purpose of it is for those specific people that have those things as far as their credentials. Does that make sense?
Yeah, no, absolutely. So maybe Dave can answer this question. What are some of the misconceptions about physician loans out there? I know, I get a lot of questions from people that I talk to. Is the rate going to be like 10%, or, or is it, am I going to, is a seller not going to sell a house to me when they see this product? So, what are some of the misconceptions out there?
Yeah, and that's a great question. And Sue, so some of the misconceptions that we get oftentimes is, hey, I have $200,000, $300,000, $400,000 in student loan debt. How does that factor into what I qualify for? Luke kind of talked upon this, but my funds are limited. How often do we run into a lot of times those who are in residency and the income is low for now, lots of student loan debt? How can I buy a house if I just don't have all kinds of assets? And so that's where a physician loan comes into play. Or I'm relocating from one state to another. I don't want to go and rent and then try and find a house. I'm going to be starting up my new job that I'm going to be working 40 to 60 hour work weeks. I'm not going to see my family. How do I have time, for all of this? And so we get that question. We get questions all the time. Hey, what if I'm paid 1099? What if I'm self-employed? What if I'm paid an hourly rate or hourly plus commission? There's a lot of different nuances. And that's why you see that not everybody does physician loans out there. Only select people will do physician loans because there are some complexities involved on there. So that's why it's important to go through that process first and get, pre-approved and talk with the physician lender and work out all of those little nuances. And, and that's why we're here and we're happy to help.
Okay. And what are some of the more common challenges or limitations that you see around physician loans?
Some of the challenges that we face are, hey, David, I'm going to be, relocating my family. I'm moving from California out to Pennsylvania. I got to study for my board exams. I got 2 kids. The last thing I want to do is worry about, am I going to have keys when I move there? And that's how, and that's how I personally got started into physician loans. It was back probably about 15 years ago. We got a call from a frantic dentist, was in a U-Haul with his family driving across the country. He got a call from his lender saying they just declined me because of my student loans. He was on his way across the country with a U-Haul with 3 kids. And you hear that story and your heart just melts. And that's why, and so it takes knowing what to do with student loans. It also takes knowing what to do with employment contracts and the verbiage associated with it. And so there's a lot of things that go into that. There's also, hey, my assets are limited. Can I use gift money? There's all kinds of things involved with it. And so there's, it's definitely good to, now I'm not saying, with physician loans, yes, and you guys have earned it with being physicians. You've earned that right. For example, like, I'm sure a lot of you are familiar with VA loans for veterans. They've earned that right to be able to have a special loan product for them. You guys as medical professionals and doctors have earned that right to do 0 down payment and no private mortgage insurance. And we see this all the time. I'm sure Luke does as well, to where you might have a bunch of money, but you don't want to use all of that towards your down payment on a new house. And so, we'll all strategize with that to see what is the best fit for you with a physician loan. Does that mean the 0 down? Does that mean putting a little bit of money down? We'll kind of play around with that to see what works best for you guys and your particular situation. Also recognizing the fact that many of you have student loan debt that you're making payments on, especially those in income-based repayment. That's another key category, is income-based repayment. A lot of non-physician loan lenders don't understand income-based repayment, and they want to use a default rate that's a lot higher than what it should be. And so that's where a physician loan comes into place. We know what to do with student loans. I'm sure, Luke, you probably have the same thing, to where you see massive amounts of student loans every day. Heck, I have nightmares sometimes of student loan debt because we see it so often on there, but we know what underwriting likes and what they don't like with that. So sorry, that's probably a little bit of rambling there.
Did you want to add anything to that, Luke? I know.
I mean, piggyback off what he said, relocation is huge because that happens a lot with doctors. And, if you're a resident and you're matching somewhere that's going to be, out from where you were at school or where you're from, you're going into a new city with nothing. And lenders, the reason we're doing these physician loans, or the basis behind them, is we're lending based off of your future, right? Not the here and now. Conventional is here and now. What does it look like right now? What do your assets look like right now? How much money have you been making for the last 2 minimum years, right? For the physician, we're basing it off of what's going to happen within the next 2 or 3 months.
Right.
And that doesn't happen with a conventional loan.
Right. So it sounds like it's partly just planning, getting started early, knowing kind of what to expect, and also having the right people to help with the logistics of putting that all together along the right timeline. Sounds like
and it's less of a risk, because we know that you're going to be able to have a high income once you're out of the gate and get things rolling. So it's less of a risk. When I do a pre-approval to a physician, I write physician on there in bold because it's as good as cash. It weighs even heavier than a conventional loan pre-approval does. Again, the reason, and it's mostly a portfolio loan, so the bank's lending their own money and it's staying on their own books. So they're not going to do that if it's high risk.
Right. So, well, that kind of leads me to my next question is, what are some of the eligibility criteria and documentation that people should expect when they are kind of going through this, loan application process?
Sure. Yeah. Well, the really neat thing about it, I think one of the most high level points that we can dig into here is their income. you can close your loan. Now it depends on a different organization, David. I'm not sure what yours is, but we could close a loan 4 months before you even start your job.
Hmm.
So say you're coming out of residency and your job starts 6 months from now, I would actually pre-approve you, and you could start looking for your house as long as you're closing that loan 120 days before you start your first salaried job. Now we have to have the contract in place, a signed employment contract, but on a conventional loan, that's not going to happen. So we're basing it off your future, right? Not what's going on right now. With a self-employed or a 1099, David and I were talking about this before the meeting started. Typically on a conventional loan, you need to have 2 years worth of tax returns at minimum so that we can calculate your income. There's ways to do it if you're just in business 1 year as a dentist per se, right? If you were practicing as a W-2 dentist for a couple years prior to starting your own office, and maybe you took over an office that's been in maybe going for the last 20 years as a family that you took over, the underwriting is going to look at that and they're going to say, okay, this is a little looser than the guidelines on a conventional loan, but they might approve that based off of your history and your work history compared to if you were just doing a conventional loan. So those are probably two of the most important ones right there as far as we're looking at your income.
Okay. Dave, you want to add anything to that?
Yeah, I think, with the income piece, you hit the nail on the head, it's one of those things that you want to sort out early in the process. The last thing you want to do, I'm sure, Luke and I can tell you stories all day, everybody, as far as you don't want to go about the process backwards to where you find a house, you fall in love with it, and now it becomes an emotional investment on there. You start to picture your family on there, and then you try and go get pre-approved. Well, if you add in the dynamics of being a physician and having future income or having student loan debt, now that adds more and more stress onto it. And, we want the home buying experience to be very enjoyable, very stress-free. And so it's good to get all that vetted out. Now, with our particular program, we actually do not have a set limit as far as how soon before start date. In fact, last month, I helped a physician who's relocating from Virginia out to Florida, transitioning from residency to attending, and we closed him. So we closed him last month. He's not starting his new attending job in Florida until October of next year. And so
that's amazing.
And so, but here's, one of the key things a lot of times when you're thinking about future income is you also have to think about it from an underwriter perspective. They also want to know, guys, as far as, okay, maybe they'll want to see some extra reserves or money set aside in the bank to say, okay, physician, I know you're going to be making a lot of money here. I can see that in your employment offer. Your new job doesn't start for 10 more months. I want to make sure you have assets because your first payment is going to be coming due here soon. And I want to make sure you can afford it and all the rest of your debts on there. So there are some other key components, and we'll certainly guide you guys through that early in the process. So you're completely educated as far as what's going on. The other piece of the puzzle is this. So here's the thing, guys, employment contracts and offer letters. There's always going to be verbiage in there that could certainly trip up underwriting later on. So for example, a lot of times we run into employment contracts or offer letters that state, hey, you got to get credentialing done. Hey, there's contingencies that need to be met. And what a lot of times underwriting will do is they'll say, hey, this is great, doctor, but now I want to get a letter from your future employer stating that all of these contingencies have been met and you're eligible to begin employment. So think about that, trying to get one of those letters, guys, and you're not starting your new job. It could be 2 weeks, it could be 2 months, it could be a lot longer than that. You don't want to make the assumption that your employer is going to write that letter for you stating, yes, you've met all the contingencies, you're eligible to begin. There could be some credentialing, there could be some licensing, some background checks that still need to be performed on there. So one of the key pieces that we like to do is we found that works over the course, the experiences, we create more of a simplified employment letter. So we'll take a look at the offer letter, the employment contract, and if we notice anything that's going to trip things up in underwriting later on, Well, how do you obtain a simplified letter that basically states your name, your start date, your position, your income, company letterhead, whoever composes it, signs it, boom, that's it. Because guess what, guys? Guess what it doesn't state on there? Doesn't talk about credentialing, doesn't talk about contingencies. So guess what? Underwriting only cares about how much money you're going to make, what's your position, what's your start date. That's still meeting underwriting guidelines, guys, but we're avoiding snakes in the grass down the road. And so that's what we use to help, make that process simple. That's what we're here. Luke and I are here to help you guys with this, to make sure the home buying is as less stress as possible, make it enjoyable, and make sure you're completely educated as far as what's happening now, what are the next steps moving forward, what do I expect? Because we recognize at the end of the day, it's you guys that make the mortgage payment, not us.
Right. And I mean, those are all fantastic tips and kind of insights. Now, do you have any additional tips, Luke, maybe, that Dave didn't touch on for, successful, smoother or smooth as can be loan application and approval process, maybe that Dave might have missed, or you can kind of elaborate on?
I mean, just be in the know, understand, ask questions. A lot of times when you come into buying a house, especially your first time around, if you're a resident, you're buried in things every single day, all day. You don't really have time to do that. So yes, it's our job to go through that with you. But if you know more, it's going to make it a lot easier for you, because buying a house doesn't have to be stressful. It doesn't have to make you not sleep at night, especially a physician loan. These can be fairly easy as long as you do things the correct way and document everything. Like you said with the employment contracts, the underwriters are the end all be all. So we do have to think about underwriting, and we need to show what they want to see, not what they don't want to see. And we see it sometimes in internal medicine. There'll be different things that are part of your program, right? Say your student loan is going to be forgiven over a certain amount of time once you go into the internal medicine program. Well, okay, we need to make sure that the underwriter knows that you're going to continue to be with this, say it's KU Med here in Kansas City. We need to that verbiage to show that within that employment contract, and maybe even have, if you don't have an employment contract yet, and you're saying, okay, you have less than 12 months left and your student loans be deferred, well, we don't want to use them against you. Well, how can we do that? Well, if you're doing internal medicine and you're going to have those things forgiven, we can go to your employer and say, hey, go ahead and give us an employment contract, even though it's maybe a year out, that shows you're going to be with this company, and then we can forgive them. It's just knowing what it all entails and documenting it correctly can make it a very easy process. But asking questions and knowing each person's story, it's case by case. Everybody's story is different. I've never done two loans that are the same, and I never will, because everybody's different. The loans are going to be different, even though it might show as a physician loan, the underwriter, everybody's situation and story is different. So asking those questions, but also being in the know on the consumer side, right? The borrower, you really need to know what you're getting into.
Yeah, no, I think that kind of leads me to my next point, is just the importance of planning, getting started early, understanding what your resources are, what resource do you have available to you. Maybe you have some family help, maybe you have a small savings. Some people have Roth IRAs out there that may or may not want to take into consideration. So I think that, and I've talked to, hundreds, if not thousands of people over the last several years. And just like you guys, not everyone's situation is the same. One individual, on paper, it may look like they shouldn't buy a house, but hey, they've got 5 kids, 3 dogs, and moving to a remote area where there's like 1 house to rent, right? So maybe the only option is to buy, right? Not ideal, but you still have to put a roof over your family's head. And then again, on paper, it looks like someone should buy, but you kind of dig a little bit and hey, maybe it's not the right thing. You're going to be there for 2 years for fellowship. You don't know what the market's going to do. You're not interested in being a landlord later on. Maybe you should just, suck it up, rent for a couple years and, buy your home in the place that you plan to be permanent. So, everyone's a little bit different. I encourage folks out there to get started early, talk to us, talk to lenders out there. If you don't have any lender resources, we can certainly connect you with folks. and just kind of get an idea of what's available to you. And I think that, you know, over time, you think you know the answer to what your future looks like, as far, you know, in reference to home purchasing, but, you know, you end up with a completely different answer. So hopefully all of this was helpful. Deb, did we have any questions out there from folks?
Yes, actually, one person asked, are your physician home loans available in all states, or are there geographical restrictions?
I'll answer that question. So there are many physician lenders out there. So I would say some can do certain states, some can do all states. But I think that for the most part, the 50 states are covered with all the different lender contacts that we have.
Yeah, just to
Awesome.
jump in, it really just depends. Like, so I know Dave, we talked earlier, he does physician loans in 25 states, I believe. And my bank does them in 4, right? We do them where our brick and mortar is. So physician loans are available across the US. It just depends on, I know Sue and Deb will be able to connect whoever with somebody that they have as far as an affiliate in that area, but they can be done nationwide. It just depends on who's it going to be, right?
Right.
Definitely. Okay, let's see here. We have a question. Let's see here. Do you allow for gifts for your down payment?
Yes, but the unique thing about physician loans is you don't need a down payment usually. So like ours, you can finance 103% of it. So even with the closing costs, you can come to the table with just your ID and a pen. So like I said, again, it's case by case, but yes, we would allow gifts if you wanted to use that for closing costs, right? If you were just doing 100% down payment. I'm not sure if yours is any different, Dave.
Yeah, with us, you know, we do allow gifts for anything, you know, if you want to do a down payment, because sometimes when you do down payment amounts, you do get a little bit of a break on the interest rate. Obviously, that's something we can certainly kind of play around with and compare apples to apples. But yes, gift money is acceptable as far as down payments, reserves, closing costs. Totally fine. No problems whatsoever.
Okay. I just wanted to ask a follow-up question to that. A lot of times lenders require letters from the gift givers to the bank. Is
Yes.
that true? Is that still true?
Yes, the signed letter. It's just called a gift letter. It's pretty basic, but it'll basically entail who you're getting the gift from, how much it's going to be, where it's coming from. They'll paper trail it. Unless it's wired, and they can just, all you need is your bank statement to show that it's being wired directly to the title company. But it's fairly simple, just a once over page.
Okay. And then, and this is way back in my banking days, was if the money were gifted to you and it was in your account for a certain amount of days, do they still need a gift letter? Does that still apply, or?
So money needs to be seasoned for 60 days. I always say do it a little bit longer, but you wouldn't need a gift letter if it had already been in your account for 60 days or more.
Okay. Great.
We've got one more question. This person says, I apologize, I joined late, so if this has already been covered. They said, are there any special provisions or terms for medical residents or fellows who are still in training?
So, I mean, like, as far as, you know, we can certainly help residents and fellows. We, you know, also if anybody who's coming directly from medical school, you know, obviously middle of March, you know, our team has that, you know, match day circled on our calendars on there. So we can certainly help out even those who, hey, I just matched. Sometimes, you know, even if you not 100% sure if you're going to get your top choice, you know, we can certainly say, okay, you know, here's kind of your options. But so, as far as residents, fellows, we can certainly help them. You know, obviously, you know, the no down payment, no private mortgage insurance, where we got lots of flexibilities with student loans on there. So those in residency, those in fellowship, those even in medical school and making that transition to finally make some money on there, we can certainly help out with that. And, you know, we certainly enjoy, especially for those transitioning, making that, I mean, that's exciting, right? Medical school to residency. Finally, you're not living off of student loans on there. So yes, we can certainly help out all of them.
Yeah. Yeah, residents are a real big one because their income is fairly low. Their debt is already climbing if it's not already at a couple $100,000. I closed 2 residents last week. They're married. They were in their 2nd year. I think they had collectively almost $500,000 in student loan debt. None of it was counted against them. We used the higher credit score of the 2. One's credit wasn't as good. One was really good. We used the higher one. And they bought a house worth $450,000 as their first home that they know they're only going to be in for a few years. But I mean, that's unheard of if you're not a resident or if you're not a doctor. $500,000 in debt, good luck, right? But like I said, we're doing this based off of what the future is going to be for them.
Great. That's the last question I have. So anybody else has any questions that you want to pop in the chat or send over to me in the Q&A?
Deb, I see some questions in the Q&A. Do you see that?
Yeah. Okay. So, yep. Armando asks, how can we connect with these lenders based in SoCal region?
So I'll take that. Armando, if you can, maybe Deb can get your info and we can send you a few different lender contacts. We have resources, definitely, we started in California, so definitely our resources there are very deep.
Great. And then what about nurse practitioners who are 1099? We do not receive letters of employment. I have spoke to David in the past, and I believe the answer was yes.
Dave, you want to take that question first?
Yeah. So, I mean, with nurse practitioners, I will say this with our specialized, no down payment, no private mortgage insurance, I will say this, the medical designations, they're very specific on who they will accept. Mm-hmm. Now, I will say this about nurse practitioners. I have a special place in my heart for nurse practitioners. I've been a type 1 diabetic for over 30 years, and guess who I see for my semi-annual doctor appointments? I don't see a doctor. I see a nurse practitioner. So I highly respect nurse practitioners, what they do, what you guys bring to the medical community. As far as the loan side is concerned, we do have products for nurse practitioners and other medical professionals. However, it's going to be a little bit different than the 0 down, no PMI. That one's pretty exclusive with your MDs, your dentists, your veterinarians. So we do have programs for nurse practitioners. They're just going to be a little bit different than MDs. And and then the 1099, we completely understand. The 1099 piece, that plays a big role. And so we certainly, through that, we've seen, Luke and I have seen it all as far as the income piece, the 1099, self-employed, you name it, we've seen it. And that's why, physician loans, even if you're not an MD, don't be scared. If you're not an MD, don't be scared to look further into physician loans or those that'll help out medical professionals. You'd be surprised that still all the flexibilities that are, that are involved with things and what we can do. And so we can certainly look into see what options are available for nurse practitioners. We've definitely helped a lot of them.
How about you?
Yeah, and to piggyback off of that, if I could, sorry, Sue. And David and I were talking about this before. It's really important to understand that mortgage is not one size fits all. And yes, we're here talking about physician loans today, but there are so many loan products out there, not even just physician loans, that would fit a specific field or a specific need for a person. And as lending goes, as time passes by, especially after the last crazy 4 or 5 years we've had, there are more loan options that are going through, compliance every single day because they want to be able to tailor fit a mortgage to everyone, right? They want everyone to be a homeowner. They want everyone to be able to build some wealth for themselves and for their families. So again, be in the know, but understand that what you see on TV, what you see on the internet, that's not just, you don't have to qualify for that one type of loan. There are so many loans that are out there for everyone.
Thank you. Deb, I think we have just maybe a few more?
We have a few more, yeah. So what are the loan limits? Are they the same as FHA or conventional? And are these primary for owner occupied homes?
Luke, you want to
So it'll
take that?
probably just vary from person to person or from lender to lender. Ours is for primary and it's up to 1.2 million to finance 103%, and then we go up to 1.7 million with 5% down. So it's going to be obviously larger than conventional loan limits. But like I said, that's going to vary depending on where you're going to be buying and which physician lender you use.
Exactly. And so, some, for me personally, my 0 down will go up to $1 million, 5% to 1.25%, 10% up to 2%. And so as you can see, each lender has their own specific. So it doesn't necessarily conform to what Fannie Mae and Freddie Mac say or FHA. While yes, we can still do those types of loans, it's not going to be a one size fits all, but yes, but Jen, bottom line is that our physician loans, mine and Luke's, can definitely go past the conforming loan limits. And for us, that's primary residence only. We do have the ability to do vacation homes and investment properties, but that's going to be a separate loan process.
Yeah. And these physician loans are not your end loan, right? That's to get you into the house when you need it. You want to, it's like say a small business that just started and they're not bankable yet. So they're going to use a private lender that might get a worse rate, but they can get themselves the loan they need to get their business going. Well, you're getting the perk of being somebody that really hasn't started, like a business that hasn't started yet, but you're going to get prime pricing, and eventually you're going to go conventional, right? Eventually you're going to have your cash in a good spot. Your income is going to be in a better spot. Your credit's going to be in a better spot, and you maybe have gained equity by then. That's the goal, right? The goal is debt free. The goal is to end up going conventional, but this just gets you in the house.
Great. All right. So we have someone asked, if planning to buy at the end of residency, when should someone reach out to lenders to get started on approval? And does each lender do a hard credit check? How to be strategic about this with regards to credit?
I would look before you're done with residency. I mean, I would contact a lender. Like Dave said earlier, you need to understand the process before you get into the process. Because that way you can prep yourself for what you want to do. Because once you get out of residency, sometimes things start moving quick. Maybe you'll get a job and you're going to be starting pretty soon. And from the time you get pre-approved, say you find a house a couple weeks later, you're still going to have another 30 days before you close on that loan. So really you need to have a time where you have a buffer of a couple months where you know what you're going to have to do, prepare yourself to do it, and then get pre-approved and start looking for your house. But that can span as far as 6 months.
Yeah, I mean, I would say sooner the better. I talked to a lot of people in all different points of they're looking for a job, they started looking for a job, they have an employment contract, all over the place. But, some people say, I wish I knew, right? What, what the lenders are looking for. It would have changed my consideration of taking XYZ job. Right. So, we touched a little bit about 1099 or, the way that different income, compensation structures happen. So I think that, yeah, I mean, I would say maybe even a year out, just start researching, start talking to people, talk to us, talk to lenders, and just kind of information gather is what I call it. And that way you'll have a better sense of, what to look for, what type of job to look for, I think the more you know, right? So, the question, when to start, talking to people, sooner the better. I would say at minimum, if I had to put, a hard line, I'd say 5 to 6 months before your actual start date, because you have to go through underwriting, you have to go through pre-approval, then you actually have to find a house. Sometimes that's the hard part. Then you get into contract, right? And then, then there's like 30 to 60 days of escrow and before you actually get the keys to your house. So I think, 5, 6 months. I mean, would you guys agree with sort of that timeline?
Yeah, a lot of times 6 months. I've many times talked to physicians, they're a year out. Hey, I'm not buying, it's summer of this year. Hey, I'm not buying until next summer. I'm not completing residency until next summer. That's fine. Totally fine. In fact, I applaud you guys for getting the process started early, looking into things, because like I mentioned before, you don't want to go about it doing it backwards, finding that house and then trying to get pre-approved, pre-qualified. Trust me, many times it can be very discouraging. And it could be a bad experience on there. So if it's a year out, if it's 6 months out, absolutely. And one of the things that we'll do is, with our process is when you fill out the application, we always start off with a soft credit pull that allows us to take a look at 2 out of the 3 credit bureaus. It doesn't damage your score at all, and you're not going to be bombarded with 100 other lenders trying to call you because all of a sudden you had a hard mortgage credit pull on
That's
there.
a
And
big
so
point.
yeah. And so, in fact, guys, there's actually legislation that's trying to go through to dissolve what we call trigger leads, guys. So, it's kind of some things that are going behind the scenes is that there are a lot of lenders out there that will pay a lot of money to when, let's say you go and you apply somewhere and you have a hard credit pull. Well, there could be 20 other lenders at least that say, okay, I'm forking out a bunch of money to where anytime there's a hard credit pull for a mortgage inquiry, I'm going to get notified and I'm going to reach out to you and I'm going to call you 5 times a day, every day for the next week. And I'm just going to bombard you. I don't care what your schedule is. There's actually legislation trying to go through to prevent that from happening. So my point through all of this is, if you can get away with just doing a soft credit pull, great. That gives us an overall picture of things. And then when you're ready to make a serious offer, then we can certainly update to a hard credit pull. Have it, Sue mentioned this, have it go through underwriting on there. We want to look at your employment contract. We want to, and here's the thing, Luke and I aren't going to be the gatekeepers that ultimately say yes on your file. It's the underwriter. So it's important that not only do Luke and I look at your file, but we also want our underwriting teams to look at it and give the blessing. That way, when you have that pre-approval letter in hand, it is rock solid. You and your realtor have complete confidence going in with the offer. You know what to expect as far as what you feel good with. As far as, here's the thing, a lot of times we'll pre-approve you for maximum possible. Doesn't mean you have to go that high, but at least you know your window. But what we're aiming to do is looking for that sweet spot. What do you feel comfortable with as far as the mortgage payment? What does that translate to into a purchase price? What does that mean to the market that's out there? So we're trying to find that, but just know everything's going to be looked at. So when you issue that pre-approval letter, it's rock solid. The other thing too, that we often run into is that a lot of times when a seller or the seller's realtor will get a pre-approval letter, even if it shows it's been looked at by an underwriter and it's a physician loan 0 down, they think, oh, they're not putting any money down. Maybe they're not that well qualified. And that's where education is key. And, and I'm sure Luke does this as well, but when we submit an offer and a client submits an offer on a house, I tell my realtor, carbon copy me on that, or let me know so we can submit that. We'll call up the listing agent, the seller's realtor, and explain what we've done on the file, why we're doing a physician loan, why physician loans are so important, and what we've done to vet through the process. And one other thing I wanted to know, and I'll stop rambling. If you are the spouse or the significant other physician, don't be afraid to be the one that does the phone calls, makes the inquiries, gathers the information. It's not like it's a requirement that Luke and I have to talk to the doctor every single time. We get it. You guys are super busy. You work crazy work weeks. You have to be flexible with your schedules. You have to be accommodating. Sometimes you're on call and whatnot. So I would say more often than not, and I'm sure Luke, you can agree to this, a lot of times we're talking to the spouse or the significant other or a family member of the physician.
Sometimes that's the only one I'm talking to.
Exactly. There's been transactions to where
their stuff too. Their credentials can count to it. Some of the misconception is, okay, you have say the wife is a doctor and the husband is an engineer, right? You can use both of their incomes to qualify for a physician loan if only one of them is a physician. And I promise you, we're going to be talking to that engineer because that doctor is working 12, 14-hour shifts, right? So again, just be in the know, ask as many questions as possible, because the more you unveil about these physician loans, the more you're going to realize this is the golden ticket, at least up until you become a conventional buyer.
I can personally attest that when my husband was probably about a year out from finishing residency, I was the one researching, and there were not many doctor loans in 2010. I think it was shortly after the 2008 financial crisis. And maybe it was like maybe a half a dozen banks. And I was the one, you know, coordinating all of that. My husband had no idea. I just said, I just said, sign here. Because he was busy, right, in residency and the amount of hours that they had to do.
Great.
I did actually want to, and I'm glad you brought this up, is the importance of having a good realtor. Realtors who understand how physician loans work. And certainly, you know, the lenders that we work with can educate the realtors, but it's actually, wouldn't it be great if the realtor would actually understand how physician loans work without having to take that extra step, right? So, you know, I want to emphasize the importance of working with realtors who have experience working with physician loans, how to integrate that into the whole offer and purchase process, because it is, as you mentioned, a little bit of a different animal, right? And it can be viewed from the seller side as an inferior offer, especially if you're in a competitive situation, which we've seen when you're going up against, you know, maybe 3-4 different offers for a very popular house, right? You want to have a realtor who understands, hey, this is just as good as any other offer, maybe even better, right, than some of the other offers that they see. So thank you for bringing that up, Dave.
Yeah, that's Dave and I's job, right? Our job is to educate, and it's not just the client, but educate the real estate agents, because you know these can be a powerful tool to win out on a property. They really can. And whenever you're able to tell the story, not only can you win the offer, but you can educate realtors in your local area, you know, about these physician loans and what they can do. And then at that point, you know, you're stronger as an organization, and you know, you're going to have more people utilizing this.
Right. You're exactly right, Luke. And you know, let's paint this picture, guys. You know, when you're dealing with a realtor who's not experienced with working physicians, especially for those relocating across state lines, that physician only has a certain amount of time there. And so you need to be working with an experienced realtor that understands that dynamic, also understands the whole physician loan piece, because how many times where I've seen this so many times to where a physician will just Google a realtor, they'll get in touch with that realtor, and then that realtor's trying to put you in touch with their local lender who has no clue how to do physician loans. And guess what? You know, Luke and I will end up getting phone calls saying, oh no, my loan just got declined. I'm 2 weeks away from closing.
So many times, unbelievable amount of times that's happened.
Yep.
And then it becomes stressful, right? Now we'll come in and save the day. I'm sure we will. But if they would have known from up front, that process, you know, a lot of times these physician loans, they don't even know they took out a loan. It really can be that easy. But like as Dave said, you just have to understand the ins and outs of it, and that they do exist, both the buyer's agent and the seller's agent, because when that happens, you might be able to close in 2 weeks, but not in a stressful manner.
Right. And you know, and just to kind of, you know, touch on the other part of Curbside, you know, we obviously, you know, connect folks with lenders, but we also connect folks with realtors, because it's just as important to have a realtor that understands physician loans and to make this process as smooth as possible. So Deb, I think we have maybe one last question, and then if there's folks out there who want to just email us separately or schedule a consult with us separately, we'll be happy to chat with you about your own personal situation, but maybe we can close out with this last question, and then Luke and Dave, you guys can give us some final thoughts, and then we'll let everyone go.
Yeah, we've kind of already answered this question, but I'm just going to throw it out there because it's a little bit different. But as a fourth-year medical student, should I wait until after match in March to start the process of looking and buying a home?
If it were me, I would actually, the sooner you can inquire on that, just to get a basic understanding of physician loans and how they work. And sometimes, you know, you have to keep in mind that you might not know what questions to ask, you know, when it comes to physician loans, because you've never been down this road before. You know, Luke and I deal with physician loans on a daily basis. This is what we eat, sleep, and breathe. And so a lot of times we run into first-time home buyers, or those who, you know, you're in medical school, you got blinders on, you're focused on completing medical school. And so this is where you rely on the experts to find out, you know, even if you don't know exactly where you're going, it's still important to find out, okay, here's what I need to know. Here's the basics. Here's the process. Here's what to expect moving forward. And so it's still good to be in the know, ask the questions, and then we'll even bring up stuff that you might not have never even thought about on there.
Mhm.
And so there is no, so if you're not completing med school for 6 months, a year, who cares?
Yeah.
Consult with us and we'll point you in the right direction.
Yeah, you may not know where you're going to be ending up, but you're going to give yourself some peace of mind when you know what to expect. Because if you don't know what to expect, and then you're jumping ship and headed 4 states over, and then you're just now learning about the ins and outs of it, it's going to be a little bit more stressful for you.
And I would also say that match day is the same for everybody. Everyone has the same exact thoughts that, you know, that you might have. And so, you know, I would say consult with someone when they have the time to talk to you and sort of consult and be able to give you a little bit of extra time to explain things, what to look out for, versus, you know, when match season comes, it gets very, very busy for all the physician lenders out there. And so, you know, it's like, you know, 100 people trying to get through one single doorway, right? You're gonna have to get in line. So why not just go through the door first, and then you can kind of know what to expect. And then it might be just a simple email. Hey, I know that, you know, I might end up in, you know, these 4 states. And so based upon that, you know, I'm looking to purchase a home, right? So you go through, you know, the whole, hey, should you buy a house? You know, what resources do you have? You know, what is your, you know, all those things. And then we can say, okay, well, once you know where you've matched, send me a quick email. I'll send you the lenders that lend in that state, reach out to them, done.
And March is going to be here quick. We're almost to
Yes.
January.
Right around the corner.
So
Yep.
right now is a good time if you haven't yet and you know you're going to be matching. I would not wait even until the new year. I would call someone tomorrow if you're on this, or if you have talked to Sue and Deb right now before the new year even starts. That way you can go into the new year understanding and have less stress because you know what the process is going to be like.
Absolutely.
So I
Absolutely.
dropped a couple of links in the chat. The first link is if you know you're ready and you just want to be matched with lender and or realtor, you can fill that quick form out, 5 or 6 questions, and then it'll get sent to us, and then we will find the appropriate people based on your situation. But if you have questions and you want to ask Sue or ask some questions, there's a place to schedule a call with us, and we can answer all of those questions. So is there anything else you guys want to throw out there? We don't have any other questions.
Closing thoughts from both of you?
You know, I would say this, you know, in this, we've touched upon this earlier. Don't ever think that there are dumb questions. Please don't ever think that there are dumb questions. Sometimes it's those dumb questions that are the most important.
Yep.
And so also don't feel like you're bothering us with too many questions. Because here's the thing, once you're a week away from closing, sometimes it's too late to change things on there. So it's important to ask as many questions as you want. Don't be afraid. Don't be afraid as far as if you want to start the process early. Owning a house is absolutely amazing. For any of those who have never owned a house, it is absolutely amazing. The feeling that you have when you get those keys in your hand is absolutely indescribable. And so we want to make sure that you're fully aware of what's going on, how to, you know, and we'll be there, you know, Luke and I will be there too after closing to help, you know, answer questions. And it's not like because the loan closes, it's not like we go away. We're here to guide you. We're here to answer questions. We're here to make sure you're 100% in the know what's going on there. Curbside, I will say this, curbside is absolutely amazing. I've been, every time I get a physician client from them, you know, that light bulb turns on. I'm like, yes, you know, I love curbside. I've worked with, you know, curbside realtors before. To give you guys a secret, my mother-in-law is with curbside and has done curbside stuff before. So here in Salt Lake City, Utah, if you need a good realtor, curbside
Yes,
you know,
yes.
and so I'm just saying, like, and I've worked with other stuff outside of Utah, but Curbside is absolutely amazing, connecting with great realtors. I've had nothing but great experiences. I've had clients give rave reviews to the realtors that are associated with Curbside. So remember, always, always, always be representative. You don't pay a dime of their commission. And there is a lot that goes on. Luke and I know there's a lot that goes on behind the scenes, paperwork, negotiations. There's a whole slew of stuff. So you want to make sure that you're represented and you don't pay them a dime. You got so much else going on in your life and you want just make sure you're represented.
Yeah, I mean, a realtor is as important as the lender, and that's how I was brought to Curbside, was through a real estate agent. So it just goes to tell you how vital and important they are. And the asking questions piece, Dave, it's the most important. And I promise, if you're a first-time home buyer, you're not going to ask all the questions that you want to ask because you're going to forget about them. I always say, if you haven't talked to us and within a couple of days, write them down so you don't forget them, because you're going to want to know everything. Everything needs to be transparent. And our real work begins once the loan closes, because I can assure you that first 6 months is going to be full of more questions than you can imagine. And we've done it all. We've seen it all, most of it, right? So we're going to be there for you all to lean on. But thank you, Sue and Deb, for allowing us to do this. David, it was wonderful to meet you, and I'm sure we'll be in touch again soon. But this was fun.
Yeah, thank you both. I mean, hopefully it was, I'm sure it was, educational for the folks that joined us. This was recorded, so maybe we can put snippets of there out there. But we appreciate your support. We appreciate you taking care of our clients. We always get great feedback, because we do ask for feedback from our clients, for our partners, and always 100% for the both of you. So, thank you for taking extra care. Yeah, and hopefully we can do another one of these sometime down the road, as things change. But we'll keep everyone posted on that. And then Deb, do you want to just close us out?
Yeah, I think I've said just about everything I need to say. I look like we had an issue with it going into the chat, so it should be there now with a couple of links for you. So that, again, the first link is if you just want to fill out the form, you know that you're ready. And then the second one is if you have questions and you want to schedule a time with Sue or I, and we can answer more questions for you. The last thing I want to throw out there is that part of Curbside's mission is to provide shelter. And so anytime you buy a home with a Curbside realtor, you are helping us provide homes to underserved populations. So every home that we get the opportunity to participate in, we share our good fortune with those who may not have it. So we're so grateful for all of you to be here. If you have questions, you can reach out to us. Find us on Instagram if you're not following us there, and look forward to having another panel or webinar of some kind in January. So be on the lookout for it. Anything else I missed, Sue?
No, I think that's it. Yeah, I hope everyone has a wonderful holiday season, and stay warm and safe and dry and all the things.
All the things. Thanks, Lou. Thanks, Dave. Luke. Thanks, Luke and Sue and Dave. We're grateful you guys were here. Have a good evening.
Thanks, guys.
See you guys.
Bye.